You know, there are moments when something happens far away and you don't immediately connect it to your own life. A conflict starts in the Gulf, ships get seized, oil prices begin to move. You hear it, you register it, and you move on. Then the State Bank of Pakistan raises interest rates. And suddenly, that distant story is not distant anymore. Let me put this in a very simple term, because this can easily sound more complicated than it really is. The State Bank of Pakistan has increased the policy rate by 1% today. Now, what does that actually mean for someone sitting at home watching this? It means money just became more expensive. So, for example, if you've taken a loan, your repayments will feel heavier. If you were thinking of taking a loan, you might think twice now. If you run a business, your cost of borrowing just went up. It doesn't hit you all at once, but it starts to show up quietly in decisions, in budgets, in plans you delay. So now the obvious question is, why now? Things were not falling apart. In fact, there were some signs that the economy was stabilizing. So why press the brakes at this moment? The answer is not inside Pakistan, it's outside. What's happening in the Gulf is already beginning to ripple through the global economy. And the first thing that moves in a situation like this is oil. Once oil prices start rising, everything else follows. Fuel becomes expensive, transport costs go up, food prices begin to creep up, electricity becomes harder to manage. And inflation, which had just started to come down, well, it's starting to perhaps come back again. So what the State Bank of Pakistan has done is actually quite straightforward. It has acted early. It has decided not to wait for the full impact to hit. It has chosen to prepare. Think of it like this. If you know a storm might be coming, you don't sit around waiting for the rain to start before you react. You prepare in advance, even if it feels a bit uncomfortable at that time. That's exactly what this move is. It's a precaution. Now here's where it becomes real for people. This is not just about economists and policy decisions. This shows up in everyday life. It's not dramatic, but it's enough to change the mood of the economy. And that's the trade-off. You take a bit of pain now to avoid a bigger problem later. That's the thinking behind this decision. But there's a larger message here that we shouldn't ignore. This is not just about one rate increase. This is about what it tells us of where we are going. Perhaps Pakistan's economy is obviously still quite sensitive. External shocks still matter a lot. A conflict in the Gulf can still force decisions here at home. And that brings us to the bigger picture. Pakistan right now is playing a very important diplomatic role in trying to reduce tensions in the region. That's very positive and it really does matter. But at the same time, Pakistan is also exposed to the economic consequences of that very conflict. So while we are trying to calm the situation, we are also absorbing its impact. What should we take from this? It's actually very simple. This is probably not the end of the story. If the situation in the Gulf worsens, if oil prices keep rising, if supply chains get disrupted, then the pressure will increase. More tough decisions may follow. So this is not a moment for panic, but it is definitely a moment to be aware. The war may be happening in the Gulf, but the impact is already being felt here at home. And today's decision by the State Bank of Pakistan is one of the first signs of that. And if things don't settle down, this may just be the beginning.